Stop kidding yourself. Those secondary market trades you're obsessing over, they don't show you the real story behind a fund's performance. You see a deal done between sellers and buyers, prices slashing and surging, but what's really happening? Are you sure that price is the truth? Because here's the brutal fact. It almost never is. Those trades, they're whispers, sometimes screams, of emotions, panic, desperation, or pure speculation. Rarely a clear window into actual fund health or real value creation. You're frustrated, right? You pore over these secondary transactions, hoping to decode some secret sauce, a reliable scoreboard, something solid to back your gut or justify that gut-wrenching decision. But all you get is noise. You see a discount on a fund stake and your mind races. Is it a fire sale or a steal? You see a premium and suddenly you think everyone knows something you don't. That's a trap. When you start depending on trades in a market that's thin, opportunistic, and brutally emotional, you're playing with shadows. Look, secondary market prices are shaped by many factors, none of which directly tell you about the fund's real performance. Sellers might be forced, maybe by liquidity crunch, risk anxiety, or shifting strategies. Buyers might be chasing momentum or just gambling on a rumor. Neither side is pricing this like a rational market with perfect info. So stop pretending you can. Instead, fix your eyes on what really matters. Get obsessed with transparency inside the fund itself. Demand granular data, not quarterly highlights. Insist on clear, consistent cash flow statements, NAV reconciliations, underlying asset valuations. Push the general partners relentlessly. Ask them how they're tracking operational improvements, portfolio company health, exit readiness. That's where real answers live. No secondary trade can mask a falling knife or inflate a rocket ship's worth for long without real fundamentals catching up. And here's a pro tip no one tells you. Look past the headline multiples and returns. Dig into cash yield. That's the real engine powering value. When that's steady or growing, it usually means the fund's on track, no matter what silly trades happen in the secondary market. Liquidity events, distributions, actual realized gains. You want those real numbers as your North Star. Also, build relationships that get you beyond the data. Connect with insiders, other investors, advisors. Tap into that network that's not just trading shares, but trading knowledge. The price you see on a secondary trade is just a number. The real story is in the conversations nobody's broadcasting. Most importantly, don't be fooled by the noise. The market is a circus of fear, greed, and sometimes just plain chaos. Secondary trades are the symptom, not the diagnosis. If you think they reveal true fund performance, you're walking blind. The real work, done in the trenches with the fund managers, their portfolio companies, and real cash flows, this is where truth lives. So here's the move. Stop chasing quick signals from secondary markets. Use that energy to get into the fundamentals, the flow of money, the operational story. Demand clarity, transparency, unfiltered truth. Be relentless with your questions, because power and control come from understanding the details no one else wants to talk about. Secondary trades might give you a hint. But hints won't get you out of the woods. You want real insight, real edge? Then stop staring at prices and start diving deep into actual cash, actual value, actual performance. That's how winners think, act, and beat the system every single time. This is about survival and dominance in private equity. It's about refusing to be the investor fooled by flashes and fake signals. It's about turning frustration into fuel, confusion into clarity, noise into understanding. Own the knowledge nobody else has and watch the market start bending to you, not the other way around. Subscribe to our YouTube channel and visit the featured link to discover more.